what it all means for the markets now with the UBS CIO, Global Wealth Management CIO, Mark Haefele. Mark, great to see you. Thanks so much for joining us. I mean, if we only get the first rate cut in September and only get one or two this year, is that bearish for stocks or not?
We don't think it's bearish for stocks. I think there's been a lot of great news that has come out from, a resolution on, let's say, the near-term price of oil, the one big beautiful bill. So, we think the U.S. market probably ends around this level at the end of the year. But there is upside if we continue to see strength in these AI trends and the power and resources trend.
So talk us through the kind of optimism it sounds like you have around the one big beautiful bill. If that does pass later today, is that an incremental positive or is it already priced in?
No, I think it's pretty much priced in. Obviously very negative if it doesn't pass, because that would take a lot of expected stimulus out of the market. I think that the bill as it ended up took out some very strong negatives like this 899 provision, but it's mildly stimulative perhaps over the near term, and the market may start to look through that at some point. But of course, the big one is tariffs, and I think the latest soundings are maybe July 9th is not such a large increase for tariffs as many people originally thought. We'll see about sectoral tariffs after that.
Why do you say that? Why do you think July 9th we won't see a tariff increase?
Well, I think we'll see some increases. But, for example, we're pricing in that we level out at about 15%. Maybe we're a little bit under that right now. I think certainly there's some tariffs priced in. But, we have gotten a few deals, and maybe more of them are towards the 10% side than, the 50% side.
Do you think the market is just okay with tariffs now? I mean, we really have climbed the wall of worry and rebounded so sharply from the Liberation Day lows. Now, 25% off the highs. So how do you think the market would take further higher tariff headlines? I mean, Vietnam was an interesting test case yesterday.
Yeah, well, I'm gonna say on the numbers that we're seeing on, say, the U.S. market, it's a mix of things. It's some positives, some negatives, positives maybe on oil or geopolitical situation, some negatives. But I'm here in Zurich, and the dollar is down 12% versus the Swiss franc. So foreign investors are looking at losses on their U.S. stocks. So that is also something we have to watch. I mean, our investors going to keep buying those dollars so they can invest in the U.S. when they're getting hammered on the currency side.
Mark, what happens to the bond market throughout the rest of this year? I mean, have you been impressed by the calmness in the U.S. Treasury market over the last month or two?
I like the volatility because we do think that eventually the inflation will subside. But because of the high levels in debt and things, we get these periods where the yields spike, and we've taken advantage of that by buying them and then selling again lower. So, but we do think by the end of the year we'll have a better handle on what's going on with the inflation, and we can still see some lower rates in the U.S.
In terms of the top sector pick, what is it for the rest of the year?
Yeah, so for the longer term, past the 6-month view, I would definitely say it's still stocks related to artificial intelligence and related to the power consumption. Obviously, we seem to hear more about that every day, but when we talk to our clients who run businesses, they're really only at the start of this journey, and we do think there's more to go. And then I think when we look at countries, we'd probably still prefer the U.S. and also emerging markets to, say, Europe, which had a tremendous run-up in the first half.
But would you tell your clients to take profits after, I said 25%, it's actually been a 29% run-up from the lows in April?
I mean, again, if you're trying to trade it over the short term, we'd probably say, hey, lighten up on the European side first. That would be the first place we would lighten up.
Okay.
Mark, thanks so much for joining us. We appreciate it.